Hello and welcome to today's The Last Street Week Ahead video. Now in today's The Last Street Week Ahead video, I'll take a look at the Nifty and I'll take a look at ITC. I'll take a look at both in terms of what you should do, whether you're trading options, futures or equity, and how it will guide the rest of the market for the coming week. But before we do that, I've got an announcement to make that I've shared a Google form in the description box below. Now in the coming few weeks, I will hold 1 to 2 free sessions for anybody who has filled the form on option buying. And anyone interested in it, do fill your details, your email, your mobile number and all. And there's a mobile number given at the top of the form. Please make sure you save it, as that's only when you receive the message from the broadcast list. If you have not saved it, then the message for the session might be sent and you will not receive it. So make sure the number is saved in your phone contact list. So that's it on that front, and so anyone interested in the option buying thing can attend it, for it is completely free. Now coming to the news front for the coming week, I believe the coming week we can expect across the market two-way volatility to happen to a good extent. The primary reason of this is that there is now a local play starting and the international play is going on. On the local front, we can see that basically, number one, the rupee is being forced to strengthen for a short while due to the moves RBI is making. Why I say for a short while? This is not a fix. The RBI should have tried to put a fix to the situation rather than this is putting a patch on a big hole, and the patch is going to go off at any point. Then also we can see if you look over the weekend, so I saw Money Control put it. I've seen Investing India. I've seen basically, I think Live Mint too put it, that there is a rumor that there are 2 lakh crore financial packages being prepared by the finance ministry. So these rumors are starting to get thrown around, sort of to create a bit of a stability to come, and the market decline to either halt or to get a dead cat bounce. So that will be a positive factor which will try to boost the market. On the negative side, we have the Israel-US thing intensifying. Over the weekend, basically quite a number of refineries in Bahrain and everywhere have been hit. Crude oil has risen. Then also everyone has seen that America has lost a lot of jets over the weekend trying to rescue their basically pilot. They had to blow some themselves even. So all that will have a dampening effect on the global markets, which will put the global cues are going to try to push our market down. The local rumors are going to try to push it up. So that will result in a box range, whether you're trading stocks or whether you're trading indexes. Box range is perfect for intraday traders because you get two-way swings which are fast. Pain for positional traders unless you just sell the option cells of the range and sit. So that's really it on the news front. Now let's take a look at the Nifty. I've chosen to look at the Nifty 500 index instead of the 50 because a lot of you hold stocks. I sold 99%, I only hold one stock now. I sold 99% of my stocks in Jan to beginning of Feb, and due to that, I'm not, as I have said, I'm not going to try to bottom fish. I'm going to wait. But since a lot of you still have not sold and portfolios are in the deep red, this will sort of give an idea of what can happen, because I'm avoiding the Nifty basically 50 and going to a Nifty 500 because the Nifty 50 is more reliant on something like Reliance Industries. I'm given a huge weightage. So it gets skewed, plus it's a tradable index, so that also skews it. The Nifty 500 gives a better picture of what is going on in the market because it's the top 500 stocks. So that's why I've taken a look at it instead of 50. Now, the Nifty 500, if we take a look at it from the high, it has managed to fall basically roughly 16%, as it's a 15.55% fall from the high. Now, that is basically one monumental fall, and it's been roughly in a month, and that has put the index in a range which we can get a dead cat bounce or we can get a box range also. A dead cat bounce can be large, it can be even up to 8% because we have fallen by 15 to 16%. So the bounce can be large, and also due to this the box range is going to be large. As I said, this is going to be a pain for positional traders because a lot are going to try to go bottom fish, and then it's going to go back down, and then it's going to go back up. So it'll drive them nuts. But for intraday traders, it's not going to be a bad when we go to the Nifty index, Sensex and Bank Nifty and all. Now, what's my view on it in terms of levels. Now, according to me, it's going to form a box range between 21,400 and 2250. As long as it is within this range, we can expect the market to sort of bounce in both ways. If it clears 21,400, then it's going to have a dead cat bounce to 22,100. On the other hand, if it breaks the 2250 support, it goes to 19,950 and 19,600. So, if you're trading the Nifty 50 or Bank Nifty or the Sensex or the mid-cap Nifty or all, you can expect, as long as the Nifty 500 stays within this range, continue trading those with a two-way directional thing. Don't hold a bias, as it can go either side. It will only get a directional side either if it breaks this or it breaks below this. So that's how I look at the Nifty 500. It is sort of now going to decide. According to me, even if a dead cat bounce comes, do not try to bottom fish stocks, as in the latter part it will again have a decline and you will have increased your volume of the stock you hold and going in for fresh decline in the future. So that's how I look at it. Now let's take a look at ITC. Now ITC has had one hell of a decline. As if we like, let's take a look at the weekly chart. We just see it's basically from the high it had made from base of 500. It is basically sort of over the weeks it has sort of halved its price nearly. It's come to 290. If it reaches 250, it's reached half. So now ITC has had a very bad fall, and most of the people who will be holding ITC will be the diehards who will say, no, we shouldn't sell ITC, it's such a great company, but unfortunately the share price is not showing that. Now, due to the whole market going in sort of a two-way stream this week, we can expect ITC to follow the same pattern. So this is how I look at ITC. I'll zoom in a bit because this is a bit of a tighter range. Now, according to me, if ITC breaks above this purple candle, which I've highlighted, this purple candle, then we can get a bounce to 309, which is the top of the box range. If it breaks below this black candle, it will get a fall till the bottom of the box range, 283. This is, I believe, ITC is at in a box range now. It's going to form between 283 and 309, and as long as it is within this range, you're not going to get a clear directional move. This is going to be good for intraday traders and overnight traders of ITC, but for the guys who are trying to find an equity buy and everything, it's going to be a pain in the behind. If it breaks 309, then it can go to 320 and 327. On the other hand, if it breaks 283, it's going down to 270, and if it breaks that, it goes to 255. Now, according to me, ITC, even if it has a dead cat bounce until this point, do not consider this stock an equity buy because it's going to come back down. It can only be an equity buy if you're buying it, let's say, on the break of this, and you go till here, and you go here, and you exit. But if you're thinking of buying and then you're going to hold for the next few years, this is not the point. You're going to get it at a much lower price later on this year, in my belief. Can be wrong, but that's how I look at the picture. And so ITC, as I said, it will flow in tandem with the market. It's going to go into a box range and break both sides. Only when it breaks 309 or 283 is when it will have a bit of a directional move. If it breaks 283, it's going to take people down even faster and harder, because 283 is a very, very strong long-term support. So 283 breaking will be very nasty for the stock. So that's it on both Nifty 500 and ITC. If you liked the video, then hit that like button, subscribe to the channel, and click the notification bell. Thank you.